Good morning. I'm Malcom Graham-Wood, and I'm on Core Finance for my CEO interview. This morning, I'm delighted to say that my guest is Oisin Fanning, the CEO of Sanleon Energy. Good morning, Oisin. Lovely to see you.
Yeah, morning, Malcolm. Likewise. Good to be on.
Now, what I'd like to do, first of all, is for those people who either don't know much about Sanleon or maybe sort of knew a bit about it in the old days but don't know about it now, because it's changed a lot. Perhaps you can give us a little summary of what the shape and how it looks at the moment, please.
Yeah, I can indeed. Yeah, so going back about 4 years, October 2016, we relisted our name, having made an investment of $175 million into OML 18, Eraton. And the way we did that was we invested $175 million at a coupon of 17%. And on top of that, we also got, literally free, we got 10.5% indirect interest in the field itself. So to date, out of that 175 million, we have received back about 195, so more than our principal, with another 115 to come. And what's important in that regard is that last year we returned about 30-odd million to shareholders through the purchase of shares. We did a share buyback at a 50% premium. And this year we did a dividend, 30 million again at a yield of 30%, just about a month ago. So we've returned about $66 million to shareholders in the last 2 years. And we have a commitment, which was in our admission document since October 2016, which basically states that 50% of net cash will go back to shareholders every year. So what that means that out of the 115 million that we're due back just on the loan notes alone, half that is going to end up back in shareholders' hands. So we'll continue that dividend policy all the way through. But on top of that, of course, the 10.5% interest will also earn income for us. That has been slow because there are, we lose about 40% of our oil to losses and downtime. But we are building a new pipeline at this moment in time, which, in the coming months will reduce that down to zero. So we'll actually get an increase of about 40% in revenues without actually doing anything in terms of drilling, et cetera, et cetera. And that will see its way back into shareholders' hands as well, which is very key to me as a shareholder myself who just bought £21 million worth of shares.
Yeah. Now, I look forward to, I'm going to chat about the shareholders later, actually. It's an inevitable question, but we'll do it towards the end, if I may. So perhaps you can explain how the Sanleon model looks like now, because obviously you explained how the cash is coming in. It has a certain impact on the P&L and so on. And other income streams as well, which I know you're keen to talk about.
Yeah, sure. Look, today we released our results and it shows a loss of about 30-odd million, but that loss is non-cash assets, which in other words, assets that we impaired. Because what we have is a financial asset, if you like, you see it in the cash flows. So I would just, if anyone's looking at the accounts, I would look at page 61, where you see the return on investment and the cash involved, 42 million during the course of last year. And we've actually stayed another 115 million, I think, between now and the next 15 months. So, having impaired Barry Rowe down to about 2.8 million from 50 odd, fundamentally, that's the end of the write-off. It's an aggressive way of tidying up the balance sheet. Should Barry Rowe or anything else happen in Barry Rowe and his partners get a partner to drill that well then it'll just be a question of basically windfall rather than write-downs. So we're Nigeria focused. It's a nice clean balance sheet now where we just return basically any cash we get, 50% at least, to shareholders. So it's looking very, very good. We're also long in cash ourselves, and we're looking at a couple of assets at the moment, smaller deals, but similar type investments where we might lend someone money to drill an extra well, be guaranteed our money back or part of our money back, and at the same time get a nice share of any incremental oil produced should the well be successful. They're the type of deals that we're looking at currently. So we're looking at all the time and trying to add value, as in cash value, so that our dividend policy can just be stronger and stronger.
Excellent. Just before we leave Barry Rowe, it's been a nightmare for a lot of people over the last few years. There is still a story that things are beginning to actually turn and that things are happening there. Is that the case, do you think?
I believe it to be the case. Yeah, I think, look, they've been very unfortunate. The deal they had with the Chinese was a big letdown for everybody during the course of last year. But, to be honest with you, sadly, that's not unusual with Chinese deals. We had Chinese look at Sanleon ourselves a few years ago, I mean, we met the board. We went to China 3-4 times. They came to Nigeria. They looked at the asset. I mean, everything looked like they were going to do something, then just silence. They just disappeared. And I assume something very similar happened to Tony Riley, God help him, and Providence. And I felt very sorry for him because it's very difficult. You can't foretell that something that's going to happen.
Yeah,
but unfortunately, it's endemic. It's endemic with Chinese companies. That said, I do believe that look, it's a good field. People are interested. What we wanted to do was not a reflection. Our write-down was not a reflection of the field at all. It was a reflection of, look, we're carrying it in the books at a certain level. We want the balance sheet nice and clean. We're now carrying it at a small, miserly 2.8 million. Anything else now will be a write-up rather than a write-down. But I'm confident. I like Barry Rowe. I think they will get their act together and get a partner, if not a number of partners.
Yeah, worth looking at. So, so taking on the acquisition front that you were just talking about, and you've mentioned the sort of criteria and the things like drilling a well, paying for somebody else as well, and with a bit of equity and so on, sounds interesting. Are you still going to be staying in West Africa, or could it be anywhere?
No. We're going to stay in Nigeria. We know Nigeria extremely well. We're there 4 years now. We have an apartment there. We have an office there. I spend at least a week to 10 days a month there normally, virus accepting. And my colleagues spend as much time as well. So because we're extremely well, and we know the players, we know the country, we know everything, why move to somewhere else to sort of start a new learning curve? And the opportunities in Nigeria are huge. There's no reason to step outside that domain, to be honest.
So you think there are things in something similar to ML18 and that you could sign up virtually straight away?
There are plenty of deals like that. I mean, look, the marginal field round is about to happen in Nigeria. The laughing thing is that in Nigeria they call it a marginal field. It's usually 100 million plus. Anywhere else in the world it'd be a decent field, but they call them marginal field licenses. And we've been contacted by a lot of people who are applying for those licenses who will need access to capital. So we're there in the background. We'll wait to see who gets the license, and then we'll enter into discussions with people like that where we could get a percentage for supplying the capital that might be necessary to drill a well or do some work or shoot 3D or whatever's necessary.
Yeah. And would you do this on your own, or would you partner up with other people to do that?
Well, no, we'd be doing it on our own, but at the same time, we'd be partnering up with a local indigenous company who's received the license. So, you'll always have a partner in Nigeria. You're obliged to effectively. It makes a lot of sense. But I think the difficulty will be that for smaller companies in Nigeria, they're going to find it extremely hard in this day and age, particularly with the low oil prices, to access capital. Nigerian banks tend to keep that capital for well-seasoned people they're used to doing business with, like my partner, et cetera. And so the smaller, new, independent little companies find it very difficult to access capital. And that's where we can come in and do a deal that's a benefit to both sides.
So on the existing asset, before we go away from that, you mentioned you have a pipeline on the way, so you get upgraded production there. How does it look further on from that? Because obviously, you mentioned that it was an initial deal and you've got a stake, but it obviously
I mean, look, it's a big field. I mean, it's the size of Bahrain. It's a massive field. I mean, it was founded in the 50s. They started developing it in the early 70s. I mean, it produced up to 200,000 barrels a day. And then basically, Shell ended up with difficulty with the locals, not unusual in Africa, and there was a lot of vandalism, and fundamentally went down to about 10,000 barrels a day. Gross, our partners have managed, we have no vandalism now, and they managed to get it up to 50,000 barrels a day gross. With the pipeline, that'll be a true 50, because one of the things that sometimes irritates me is that people say 50 gross, but actually, you're losing 40% anyway in theft and downtime. So really, the true figure is much less than that. 30,000 barrels is closer to the figure. So with the new pipeline, though, 50 will mean 50, and that will make a huge difference. Huge difference. And these guys are very clever. I mean, they I tell you one thing, they can steal. Like there was a great story years ago where people were overflying the field and said, "Oh my God, look at all our Shell boys working hard down there," and it was actually the thieves themselves dressed in Shell uniforms tapping into the pipeline. So these guys, you want to be up now. The nice thing with that pipeline is the new pipeline runs straight down a river and straight out to sea for 30 kilometers. It's a 50-kilometer pipeline. There's no theft on the river. all the theft happens in the swamps because you can't see if someone's tapped 9 meters down into your line in a swamp. It's just impossible. How they do it, God knows, but you can't see. But in the river, it's trolled all the time, and there's no theft on that particular river. And going out to sea, obviously, it's the same thing. So, actually, we're accounting going from about 40% losses down to 3%. And the reason is, I don't know even why we have the 3 there. It's just an accounting exercise because it actually should be 0.
Yeah.
So, that'll make a big, big difference to us as we go forward. A very big difference to everybody.
And that'll bring in cash. How much work? Have you got any other works to go on the license?
Oh God, yeah. I mean, the license is huge. We have so much 3D in that license. We haven't even begun to interpret it yet. This is akin to shooting fish in a barrel. It's a multi-stack pay time and time again. Often you'll find out that the likes of the bigger companies only hit maybe one area and didn't bother going to the other 3 or 4. Work over wells. We've done, I think we did 11 or 12 of those this year. And 3 new wells. So, the potential is huge. There's, you could safely say that you could at least recover 600 to 700 more million barrels of oil. And we're also sitting on like the 4 trillion cubic feet of gas. We're only selling 60 million scf of gas a day to our partner in Notori. They have a urea plant, and he hopes to build up enough infrastructure to take about 500 a day in the next 4 or 5 years. And that's the one thing that people don't realize about Nigeria. Fundamentally, it's actually a gas country, which produces oil, but it doesn't have the infrastructure for gas. And so people tend to view it as an oil state because that's what everybody produced because it was easy to ship and easy to sell. But when they get the act together and start connecting some of those gas lines, they have massive reserves across the country, massive reserves. There's a lot, for instance, for us, there's 4 trillion cubic feet of gas just sitting there waiting to be tapped into just on that one license. So that's why I say the potential is huge.
No, and I agree on that. And I know that Nigeria's had a sort of bad press for quite a long time for all sorts of reasons.
Mm-hmm.
But I was talking to Andrew Knott the other day, and he told me that the long-term production rate and success rate and everything else from Nigeria is as good as anywhere. They just have bad spells when things go wrong and everything else. But he is convinced, like you, that when he's got all his gas fields and so on online, it'll be gas more than oil and deliverable. And the country has what seemingly, massive thirst for gas for power.
Huge. They have a massive thirst. They do need. There is an issue in that, like most African governments, they don't tend to pay for their power. So all the power companies and all the producers of gas for power at this moment in time are suffering because they're not getting paid. They formed a consortium to try and deal with that. It's endemic in Africa. They seem to think that once they got the power, it's basically for free.
Yeah.
And as a result, all these companies are carrying massive debt in the billions, some of them. And that needs to be rectified, and there needs to be some structure put in place to make sure that these companies get paid. And then you won't have, if you're in Nigeria, the power goes off probably every hour. It's ridiculous. The most important thing people could win in a raffle when they're at a party is a generator. It's so sad. And when they have this massive resource just sitting there available to them, and they just need to get the act together. But that said, look, it suffered from corruption like most African states. Buhari's done away with an awful lot of that. There'll always be some, but at the end of the day, there has been a big sea change during the course of his government. He's now into a second term. Yeah. And I'd expect that to continue. And there's a lot more focus now on what do we need to do to grow our country, because it's got a population of 180 million. It's destined to grow, they say, close to 500 million over the next 20 years. So they have to do something. And we are seeing that happening. And I think there's a good focus there over the last number of years.
Excellent. Now, so as a result of all what we talked about so far, where does that leave the financial position? You mentioned the balance sheet, you mentioned the payouts, and what the yield might be, and in terms of what further buyouts and so on. Can you give us a sort of wrap up of what all that leads to now?
Well, look, I think it's safe to say that we'll be returning at least another 60 to 70 million to shareholders over the next 15 months. That's the very minimum we'll be doing. I think our focus now is to make sure that once all those loan notes and everything else run out with the pipeline, with other deals that we're doing, that we can continue that, basically. We want to be known as the company, one of the few AIM oil and gas companies on AIM, if not the only one, who actually gives a dividend to shareholders every single year. And frankly, I don't think there's a retail investor around in this day and age who remembers companies who did that. And it's been our focus from day one. People thought it was a lofty idea, but it's now happened 2 years in a row, and we'll continue that. And we're very focused on it. And I particularly am more focused than usual, as you might know.
Well, I'd like to come on to that since you mentioned it, because let's talk about the shareholders and the shareholder list and the free float and everything else. Because if you'd looked at it a year or so ago, you wouldn't have had so many. So at the moment, as far as I can see from the website, Tusker have got 50-odd%, Midwestern have got 13%, and you've got 24%. Been buying in stock. So who's doing what? And I know that you're keen to get the retail and a bit of free float going. So talk us through the shareholder list and what Mr. Hughes and so on are doing.
Obviously, Tusker have been a huge support to the company from day one. Without Tusker, we wouldn't have been able to buy into Omel 18 in the first place, because it would be fair to say that when we looked to raise the money at the time, back in 2016, I was quite surprised about the amount of red flags, if you like, that popped up in institutions vis-a-vis Nigeria. And Tusker's ticket increased because of it, because he wanted to support us. He was already a shareholder through a company called Aurelian, which we bought.
I remember.
About 28% of Aurelian, we bought that company. So he'd got to know us, and he got to know our ambitions, etc. And he wrote in and supported us. So effectively, that ended up with him ending up, and he also took loose stock that was in the market. I think one of the institutions was selling out last year, had 10%. I think it was Capital. And he happened to buy that rather than it hitting and decimating the market. He bought that as well. It brought him up from 62 to 72. He very graciously offered me the opportunity to buy in. I've always been keen to buy in. And so I bought 22% off him, which brings my share, as you said, up to 24%. But, without an institution like Tusker behind us, none of what we've done would be possible, because we were able to wade through the difficult times, get to the level where we were able to return funds to shareholders. I mean, when we did the share buyback, Tusker didn't get involved at all, so he didn't take any money off the table in that. Clearly, he got some in the dividend, as everybody did, and he would benefit from the dividends going forward. But he's always there in the background to support us. GT Okoloko, Midwestern, with their share of 13%, that's a good thing for us. We had a difficulty with one shareholder at the time, another Nigerian, who felt maybe that we'd bought him too cheaply at the time. And it was just creating a lot of hassle, as they can do in Nigeria, going to court, and this was just nonsense, really. But GT Okoloko, Midwestern stepped in and just bought them out. And fundamentally, that gave them their 13%. So, on the one hand, you have a major hedge fund sort of institution involved. On the other hand, you have the CEO who's up to his neck in debt, so clearly wants to make sure there are plenty of dividends to pay that off. And on the other hand, you've got our partner in Nigeria owning 13% of the company. So actually, you couldn't hope for better in terms of a combination. What we really need to do now is see a bigger free float and create an opportunity for retail investors to get more involved in the company. And we're beginning to see that, but we certainly, the free float of 10% has to improve, it has to increase, and we find an opportunity to do that somehow during the year. It might be that as we're doing an investment, we decide to raise a small amount of money, say, let's say, I'm just speaking off the top of my head, say 10 million only for retail investors, not for institutional, to give them an opportunity to get involved, or it may even be less than that, but at least to give a chance for new, because even the existing free float that we have, the retail investors that are there, very few of them actually sell. They've been sitting there for quite a while. And as a result, then you get very little liquidity, and we need to improve that.
Yeah, but they must have a fairly decent running yield on the stock and going forward.
They do, and we'll continue to do so now.
We're coming to the end of the allocated time, Oisin. What I'd love you to do is, if you could encapsulate everything that you've said in the last 15 or 20 minutes, just to say where you'd like to see Stanley on in a year or so's time. And I'm delighted because I've started looking at the company again recently, and I like it. I like what I see. Give us a thumbnail sketch of where you'd like to see it in a year's time.
Well, in a year's time, I'd like to be sitting here telling you that I've just given another 30 or 40 million back to shareholders, full stop, and speculating on how much more I'll be giving back 12 months from then, if not less. And I think we will be having that conversation, and that is the full focus of the company. So I really, other than that, that's the focus. There's nothing that I can see that's going to impair that. If anything else, if anything with the pipeline, etc., it's just going to improve it. So I'm, to be honest with you, I'm one of the few people during the course of this lockdown has been very, very happy, beginning to build up and see where we're going over the next 12 months and trying to ascertain when and what period of time we're going to be giving dividends out to shareholders. I mean, that's been my focus.
Oisin, thank you very much indeed for your time today. I really appreciate it, and I look forward to seeing this.
No problem.
I've been Malcom Graham-Wood. This has been my CEO interview today. My guest has been Oisin Fanning of San Leon Energy. I look forward to seeing you again soon on Call London, and thank you very much for joining us.